Good day, everybody. John Seville from Acorn Wealth. The executive summary now for your stock setups for Friday, the 7th of August. Now, we've had some rock star action so far from, of course, for those of you following along with our picks from Tuesday, they've had some beautiful drops. VMware, of course, one of the big winners. We talked about that as a drop from that 92 area straight down, now at 90, now at 83. So for those of you playing the stock, or if you're lucky enough to have picked up some options, you should be well in the money from there. GWRE's dropped beautifully. That's done really well. As you can see, that's just kind of dropped out of its little support zone, broke that 58 support. So that looks like it could be now in free fall territory. And CSC, another one of the shorts that we picked out. This one's dropping really well. So it's been just really nice across the board. Now, in Trading Room tonight, we talked about Alcoa basically reaching a point where we feel it's probably we'd be quite happy to consider this, the end of the run to the downside, and it's down like 30+% now since we found it. So that's a beautiful profit if you're in that one. And now start trying to start freeing up capital for new trades. Obviously, a lot of new ones we talked about on Tuesday, and now we've got a few new ones for tonight. So let's have a look at the S&P 500. The S&P 500 is just, it's right there, right at where the bottom of that right shoulder is. We've been saying this, so those of you following with our executive summaries, we said this weeks ago that we're in a head and shoulders pattern, that we'd rally up, come back down, bounce on 2078, and that we'd close the week out around 2100 to 2110. We did. We printed open range on Monday. We closed below open range today, completed a head and shoulders pattern in terms of the top half. And so now what this is suggesting is that there will be a break to the downside, which is down to basically 2020, 2010. So that's what we're looking at. And if we go back and kind of confirm using some Fibonacci's, going from the bottom of that, the bottom of the lows in October, you can see that that's exactly where a 38.2 Fibonacci retracement will take us to. So I'm looking at a target on the S&P of 2015, essentially, is what I'm looking for. Now, what we don't know, or what can sometimes be a little unclear about a head and shoulders, is whether it's going to break straight away. So the downside to the head and shoulders has completed, but what we now need is a break of the neckline for it to continue on to those to that lower target. So we won't know, of course, until probably end of the market tomorrow or Monday. But what's possible is we can sometimes get a second shoulder, which would, mean a rally back up to this area and then down. That's called a complex head and shoulders. So we won't know whether it's a simple or a complex until that break actually occurs. Now, there are a couple of longs. Now, these are extremes. These are from the Bollinger Long Extreme Scan. That could be possible long plays. Now we're looking for this on CRIS. I'm looking for a drop down to 233. You can see the money flow is really good. If it drops down to 233, I'd be looking for a long up to 278, just where that 38.2 Fibonacci is, with a stop at 217. Basically 3-to-1 risk-reward ratio there. The next one is IART. Again, we've got good money flow that's just shot straight up here. Again, sharp reversal here on this previously, as well as back there. So I'd be looking at a possible long here at 58.13 to $60.90. So and a stop loss at 57.67. So we're looking at about 7-to-1 risk-reward ratio there. So again, these types of trades, if you can find 7 more like it, then all you need to do is get 1 right out of 7, and you're breaking even. Get 2 right out of 7, now you're making money. So these types of trades, I approach these expecting to lose half the time, because you don't care whether you're really right or wrong. You just want the risk-reward to be really well in your favor, and that's where you've got to find these special setups. So I think this one's excellent from the risk-reward standpoint, even if it's only a say 60% probability that it will rally. And that's how you've got to think of those. So that's why you also got to find more than just one. So if I'm taking these types of trades, I'll try and take, at least say 3 stocks or 4 trades that all have the same type of setup and risk reward. This one does as well. Looking at along here at 22.53, really big rally here. So looking for a 22.53 entry up to 24.92, so about $2.40 on the upside, with a stop loss at 22.23. So 30 cents of risk for $2.40 reward. I mean, again, you can see that is awesome risk reward with so it's about 8-to-1 risk reward ratio there as well. So those all really work well from that perspective. And the other one, if you're looking at just kind of finding a group of stocks with that same type of reversal trade, the other one would be ALXN because it's right at support. Support is at 189.40. We're at 189.73. So I'd be looking at taking the trade there, but my stop loss would be right underneath that at say like 189.33. So you're looking basically at 40 cents of risk, and I'd be looking at a rally up to this level here at 195. So 40 cents of risk for $5 reward. Again, that's a 10-to-1 plus risk reward ratio. So those are the tricks here. They're nowhere near as high a probability as some of these momentum trades we've been finding, but the risk reward is awesome. So for that type of a strategy, these can generally work well. Now, on the short side, we got 3 plays to talk about. WWAV is an earnings play. Reports tomorrow. If you found this one last night using our FinViz scans that we've been teaching, this one, the options are already up. Already up 100% today, the puts, and this one's looking reasonably good, and it's just kind of plugging away. It's got a 60 P to E ratio, so I mean you could be looking at kind of like those $50 puts, August puts, and that could be an easy drop down to probably be looking here to this level. Around about 40, around about 47 and change, if earnings disappoint. There's also been insider selling. If you follow Jim Cramer and so forth, he thinks this is a buyout target. But the analyst target on this has been is where it currently is at $50, and there has been insider selling on this recently of a reasonable amount from the insider directors. That's interesting, and this obviously in these types of markets, this could be susceptible to a breakdown. You're looking at also a bearish pattern because we're dealing with an upward channel. We've had quite a few touches on that support level. Excuse me, I'm drawing it slightly off. Excuse me. Yeah, so this could be a breakdown scenario. Again, earnings tomorrow, so you'd have to act quickly on that one. KSS is another options play. This one is Coles stores, and if you look at on the long term, you can see that if we go to the weekly chart, you'll see that we've got a head and shoulders pattern here. Long-term support is not there. Let's have a quick look. Here we go. That's the correct trend line, and there is your neckline. So you can see looks like we've actually just broken down below it. So real confirmation, which would be nice, would be like a further breakdown from here, and that's where we could get like a real confirmation move, because typically, as you know, a head and shoulders will bounce up first, and we'll get a second right shoulder. So a bounce here up to kind of that 70 level, but we haven't obviously yet done that. We're still up. Okay, so if we rally up, that would be perfect for a short there, but probably won't get that far up. So Again, a really important watch. On KSS here, I'd be looking at the $60 August puts, which are at $1.60, and the 55 January 2016 puts, which are $2.10. Because this one could literally go all the way down to around that $43 mark, which is right where you see this support coming into place. So that could be that's looking at if a $60 drop down to say 45, a $15 drop on puts that cost $2. Well, I mean, you're talking about some significant 700 plus percent possible gains if that were to occur. And if it rallied up first up into the $71 range, then obviously you're talking about the thousands of percent. And last but not least, AMBA, semiconductor space, obviously has been under a lot of pressure, and AMBA so fits the model. You can see the money flow has certainly dropped straight out from underneath the stock, and looking at the daily chart, you can see it's just forming up on a base of support. Looks like it's about to break. Beautiful double top. So measuring the double top, we can see that from top to bottom, the duplication of that gives us basically a target down here of $70 and change. We're currently at 113, so that's a potential, basically, what are we looking at there? $43 potential drop on this stock. That's huge. So options could certainly be interesting. And I'd be looking at the option chain, looking some out of the money, kind of $100 puts, for example. And but this could really have a significant drop. So this is one I'd be looking at, AMBA. On the stock side, I look at a $109.73 entry. Look at a $82 and $3 a 3-cent target for the first target, and I look at 114.73 as the stop criteria. And that brings us to an end for that. Now, if you aren't a fully fledged Acorn member, you want to get these videos on a regular basis with updates every single day, then you need to take a trial of our service. Don't miss out. We've got huge market opportunities coming up. Literally 10-bagger, 20-bagger opportunities. Don't miss them. Just sign up for a trial at acornwealthcorp.com/fly. FLY. And we will see you soon in the next executive summary. Good night.